We got 9:25. I haven't even started. There we go. So I've got a couple of forward-looking statements. Not sure what we got to, but there are two in there. So we're a copper story. We're about 8 billion pounds of copper, 3 billion pounds of zinc, 1 million ounces of gold, and just recently today we announced a cobalt resource of 77 million pounds. We're focused on advancing two projects in Alaska, safe jurisdiction. I think that's important in the world. I think the panel talked about that this morning. This is a district exploration play, so there's going to be a lot of exploration upside over time. Our two projects, the more advanced is Arctic, 5% copper equivalent open pit mine. I think it'll be one of the largest or one of the highest grade open pit copper projects in the world, which is we just finished the pre-feas. We're working now on the feasibility and on permitting. On our exploration project at Bornite, which has over 6 billion pounds of copper and now the 77 million pounds of cobalt, and the $10 million exploration program this year will certainly add to that resource base. High level Arctic, 43 million tons of over 2% copper, over 3% zinc, a little bit of lead, half a gram of gold, and an ounce of silver. Production level there at a 10,000 ton per day throughput, 80,000 metric tons of copper, 100,000 metric tons of zinc, lead, 30,000 ounces of gold, and 3 million ounces of silver. So a significant producer of all metals. 1.4 billion post-tax IRR, over 30%, or 1.4 billion NPV, over 30% IRR. So this is a real project. Our share capital structure, we've got about $40 million in the bank after our financing, 130 million shares outstanding, a top roster of institutional shareholders, including our potential joint venture partner, South32. I'll explain about the business arrangement with them in a minute. So no debt and largely institutionally held, obviously. I want to talk about our three partnerships because they're very important in terms of getting this project off the ground. First and foremost is with NANA, Alaska Regional Native Corporation. It's a business partnership. They receive a royalty. They have an option to participate as an equity partner. And we have a very close working relationship with NANA. NANA is in the Northwest Arctic region of Alaska. This is organized into a borough. The borough economy is really driven by the Red Dog mine, largest zinc mine in the world. And it is the reason we're in good stead here is because these folks understand mining and understand that mining's been very, very good for them and for the borough. It forms the basis of the local economy. So what they want is a second mine in the region. Our second partnership's with the Alaska Industrial Development Export Authority. This is known by the acronym AIDA. Their job is to build infrastructure in the state of Alaska. Clearly, we don't have a lot of infrastructure in the state. They built the Red Dog Road and port facility, and they're applying that same public-private partnership model to build the Ambler Access Road. It's in the middle of permitting right now. It's a 211-mile road that will connect the Ambler Mining District to the Dalton Highway. That connects down to Fairbanks and the Alaska Railroad down to 4 ice-free ports in south central Alaska. The permitting process is well underway. Scoping was finished. The scoping document was released about a month and a half ago, 2 months ago. They're finalizing the draft EIS, which they plan to have done in the first quarter of 2019. Along with a document that the Park Service is working on their piece, which is called an environmental assessment. That'll be done at the end of the year. And that's a critical document because obviously building a road through the park and preserve is the more challenging part of this exercise, but that'll be determined at the end of this year. So we'll look forward to that document. Our third partnership is with South32. I mentioned them earlier as an equity owner. The business arrangement here is it's a $10 million a year option for 3 years. We're in year 2. We're spending the $10 million on exploring the Bornite property. Within that 3-year timeline, at any time, they can exercise a right to form a 50-50 partnership by contributing the first $150 million. So it represents about a 50% increase or a 50% premium on what we've spent on the project over time. So let's talk about the projects. First, Arctic, in the central part of the Ambler Schist Belt, a 100-kilometer-long belt of volcanogenic massive sulfide polymetallic deposits, all high grade. At Arctic, we have the good fortune that this deposit sits just underneath the hillside here. 43 million tons of over 2% copper, 3% zinc, the lead, gold, and silver as other credits. The pre-feasibility study envisions a 10,000 ton a day operation, 12-year mine life, producing 160 million pounds of copper, 200 million pounds of zinc, 30 million pounds of lead, 3 million ounces of silver, and 30,000 ounces of gold. Your NPV, 1.4 billion post-tax. Your cash costs are very low as a result of the high grades and the byproduct credits at about 15 cents. Total all-in costs, including capital and operating, are down around 63 cents. So you're generating at today's copper price over $500 million of free cash flow a year. This is a real mine. Capital costs around $780 million initial, with about $65 million in sustaining, and the $65 million bond, probably reclamation bond, puts the total capital intensity about 1/3 of what most new copper mines are costing, at about $6,200. All that results in a great IRR of over 30% and a 2-year payback. So this, again, it's a real project. High quality concentrates. We're producing a 30% copper con, a 60% zinc con, and a 55% lead con. Most of the value in the lead con is the 70 ounces of silver and the better than an ounce of gold. So these will be well sought out after by markets in Asia. Next steps, continue to work with Ada, Nana, and the villages on the permitting of the Ambler Access Road. We've been undertaking an ore sorting study. We have about 30% dilution of the ore. If you notice, our resource grades are about 3% copper and our reserve grades about 2% copper. That's because of the dilution at the mine face. We think ore sorting can be applied here to get rid of the waste that we didn't want to mine in the first place. And so we'll be reporting on that later this year. The preliminary results are very, very positive. We'll start permitting the mine next year. This year's program is really to gather all the information to put the permit application together for the federal permits and then later the state permits. Along with that, of course, we'll be completing our feasibility study. So this project's moving solidly forward, and of course, we just raised the financing to be able to accomplish all this. Next project up is Bornite. It's about 20 miles to the southwest. And this, of course, is where we're spending South 32's money. Last year we drilled a dozen holes. We're going to drill a dozen more this year, mostly infill and expanding on the higher grade zones. We've already outlined 125 million tons of 1% in an open pit and 58 million tons of 3% copper in the underground, what we envision as the underground. I talked about the resource, the cobalt resource that we just put out. 77 million pounds makes it one of the largest cobalt resources in North America. Of course, cobalt's commonly mined in the Congo. About 65% of it comes there, not the most stable place in the world. They are blessed with lots of cobalt. Cobalt, of course, is an important ingredient in electric vehicle batteries. Most of our cobalt occurs as post-cobaltiferous pyrite, which is a good thing because when you concentrate the copper, we get about 35% copper grades in our copper cons. What goes into the tails is the pyrite, and the pyrite contains the cobalt. So we'll be doing further work on getting the cobalt out of the pyrite con and reporting on that later this year. But it's a great start to start talking about cobalt, which is an important metal, and it's a value add here. The main value here is certainly still going to be copper, but it's a nice value add. Exploration work this year. This is a grade times thickness map. We'll expand the resource. We've got 6 billion pounds of copper and the 77 million pounds of cobalt. I think we can maybe get 7 or 8 billion pounds of copper with the expanded drilling this year, and maybe 100 million pounds of cobalt. That's definitely a forward-looking statement. We'll be drilling both in the open pit area, but mostly on that big purple blob there to expand the resource. North American jurisdiction, high-quality assets, and now we can add cobalt to the story. We're in booth 4. Thanks.